Meanwhile, the U.S. Federal Reserve held interest rates steady this morning, resisting renewed pressure from President Donald Trump to cut borrowing costs. Fed Chair Jerome Powell said inflation remains elevated and policy decisions will continue to be guided by economic data, not political demands. Our Seung-jae has more.
The U.S. Federal Reserve has kept its benchmark interest rate unchanged, pushing back against continued pressure from President Donald Trump to cut borrowing costs and underscoring the central bank's independence. At the conclusion of its two-day Federal Open Market Committee meeting on Wednesday, the Fed voted to maintain its policy rate in the 3.5 to 3.75% range. The decision follows 3 consecutive rate cuts since September. The rate freeze means the interest rate gap between South Korea and the higher end of the U.S. rates is 1.25 percentage points. 10 of the Fed's 12 voting members, including Chairman Jerome Powell, supported the decision to pause the cuts. 2 officials, Stephen Moran and Christopher Waller, dissented, calling instead for a quarter percentage point rate cut. Speaking at a press conference, Powell said the current policy stance remains appropriate.
In support of our goals, today the Federal Open Market Committee decided to leave our policy rate unchanged. Having lowered our policy rate by 75 basis points over the course of our previous 3 meetings, we see the current stance of monetary policy as appropriate to promote progress toward both our maximum employment and 2% inflation goals.
The decision comes amid heightened political pressure on the central bank. Powell recently disclosed that he is under investigation related to his congressional testimony last year and the Fed's building renovation project. He has suggested the scrutiny reflects tensions stemming from the Fed's refusal to set interest rates based on political preferences. While declining to address politically charged questions directly, Powell stressed the importance of central bank independence, reaffirming that monetary policy decisions are driven by economic data and long-term stability rather than external pressure. Seung-jae, ArirangNews.